Thank you, Mr. Navarro. And now I call to talk about financing sustainable entrepreneurship, Mr. Gustavo Junqueira.
Thank you, everyone, for attending this event. Thank you for the Brazil Invest for inviting me to speak here today. The subject here is a little bit different from all the scientific studies that we have seen in some of the other presentations. But it's good to give a little information how Brazil has developed throughout the last years. I think the governor of Acre gave a good speech on how the previous government helped the country to develop. I think we're going to see a little bit of numbers and also see how we, as an institution, are forecasting, or at least trying to see a little bit of what's going to happen in the near future. Just a very quick background on who's Pine. Pine is a Brazilian bank focused on financing mid and large companies in Brazil. We are about a bank that has 10 billion reais in total assets. Out of those 10 billion, 6.5 are on money that we have with loans with corporate companies in Brazil, out of a equity of close to 900 million reais. The bank is really focused on clients. We are not a house that does a lot of proprietary investments. We are always looking for solutions to our clients. And to do that, we have a whole array of products and services that we provide. We have a very strong balance sheet. We have been working in Brazil since 1997. We have a fairly good expertise in providing credit to companies. Our rate of our percent of losses is very, very small, so we know how to see companies that will perform and companies that are doing good business and those that are not. And we are doing that in a very conservative way. If you see, we have a Basel index that is very conservative. We have about 16% of Basel index, and we are assuring returns around 15 to 16% return on equity to our investors. The credit portfolio is well diversified and is based on a collateral. I mean, all the loans that are secured by hard assets, so we have a good performance. We also manage very well our assets and liabilities. I mean, all the money that we lend is secured by borrowings that will be due after the loans are due. So that gives us a positive gap in our management. Going to the real subject of the presentation is really how to finance all this sustainable entrepreneurship that we are looking into Brazil, that we are trying to do. And it's okay to have good projects, but we have to have financing to do that. Here's a little bit what Brazil has changed in a very few years. I mean, from 2006 to what is our expectation for the end of 2011. Our GDP basically multiplied by 2.4 times in a very short period of time. Population has grown by about 8%. Unemployment has come down in a world that is much more volatile and dangerous than the previous era. Our inflation, it's true, has gone up a little bit. I think the debate between growth and inflation has always been an issue. But of course, we believe it's manageable at 6.7. We also believe that this will come down to 5%, 5.5 by the next year. The currency is very volatile in the last 2 weeks, but we believe it will be around 1.75 by the end of the year. Our international reserves, here again, it's a very impressive number, has come up from $85 billion to $370 billion. So Brazil has money to sustain all the volatility and the difficulties the world is passing right now. But our resources, of course, are limited at some point. I think the world has worked in tandem to be able to cope with all the problems together. It's not going to be one country that will resolve the other problem of other countries. And our foreign debt, I think it's an important point. I mean, we are not dependent today of the external debt as we were 10 years ago. We're basically a country that is not an island. It's a continent, but it's not an island. It is not isolated from all the world's problems, but we can live of our resources and try to develop our country and our people with our means. It's important to highlight here that all this development has not been gained through low interest rates. I mean, if you look, interest rates in Brazil has really decreased over time since the 1990s, where we have interest rate close to 25%. Now we have 6.9% real interest rates. But even if it's a huge drop, when you look at the graph on the right side, you're going to see that we are totally out of whack with the world. I mean, there are negative real interest rates in most of the countries, and we're still the highest interest rates in the world. Our belief is that interest rates in Brazil will continue to come down, and that we'll also see growth for coming years. We expect, of course, a growth in a lower than what we have seen in the last years, but still impressive growth when compared to what the world is experiencing today and should experience in the next years. 4% is what we expect the next 10 years, is as the average growth what Brazil will have. And that will bring Brazil to be among the 4 largest economies in the world. It's a very optimistic chart when you look at this, and it certainly brings to us Brazilians a very big responsibility to be able to play in the international arena with the other players that we see there. So how companies will finance? We are living today a crisis of leverage. We are living the results of immense growth. If you go to cities like Miami 30 years ago, 25 years ago, was a city that's not compared what you have Miami today. So all the leverage that we have experienced has its negative effect, as we see now, but it has very positive effects because most of the countries are better off today than they were 10 years ago. What you see here is that Brazil has also experienced some of that growth. It has, the companies has gone from, the finance through credit has gone from 32% to 57% of the GDP. But if you compare to economies like the US, we're still very far from the 200% leverage that the Americans have within their companies. Of course, I don't believe that the 200 is a number that we should benchmark our growth, because we're going to see that leverage coming down. But if you think that 180%, 70%